In this video, we cut through the noise and layer the complete picture on Bitcoin: structure, momentum, volume, and the exact price levels that will confirm Bitcoin's next move to 100K. For a long time, Bitcoin's price action was trapped in February's monthly range, but it was the 29th of March that started the push higher. The unrelenting rally was determined to finally break away from the February high at $89,344, and finally, on 4th May, it did manage to close above that and reach a peak on 6th at $82,791. But from there, it lost steam and produced a lower high on 11th at $82,317 and fell away to its current price around $78,400. We have been long since 12th April with an average price of 70K when our buy alert fired and we saw a TK cross on the Ichimoku. Price is sitting above the clouds and the line of least resistance is up. And there are reasons why Bitcoin is taking a breather. The yearly midpoint at $78,950, which we explained in our last Bitcoin video, link above and in the description, was a price level that was expected to act as some kind of resistance. We also mentioned that since the 6th February low, we have been working within a rising price channel, and every time it has hit that upper band, we have had some reaction. Here are the dates: 8th Feb, 4th March, 17th March, 22nd April, and sure enough, the current 6th May high saw a reaction, as did the 10th May lower high. So this current pullback was to be expected, and if we look closely, we are only pulling back to the midpoint of that channel. We are still sitting above the April monthly midpoint and the March high. Next, May's current high has slammed straight into the Fibonacci resistance zone head-on. That sits between $82,610 and $82,756, and on the downside, we have two tight Fibonacci support zones between $77,386 to $77,866, and below that, $76,709 to $76,891. And then there's the price gap caused by the 28th January high. That price gap on the way down needs to be filled on the way up. So you can see there is reason to suspect that this is just a shallow pullback in a continued uptrend, and here's another compelling reason why we feel prices will go higher. The weekly swing chart has produced a change in character. The rally from 6th February low to the 6th May high, $82,791, produced an upswing, and last week's low was broken, producing a weekly swing down. What does this mean? If, as we suspect, this is just a shallow pullback and bulls remain strong, then if the swing high of 6th May is taken out, this will cause a weekly uptrend, a strong bullish sign to be a buyer. Bitcoin's weekly ranges are compressing, waiting for the green light for its next move. The ranges have gone from 77.10, 54.62, 49.60, 45.86, and 45.05. The tighter they get, the more explosive this next move will be. As long as we are sitting above the 2026 anchored VWAP at around $73,000 and the swing low of 29th April at $74,500 is still holding, there is no reason to be contemplating any shorts. All still bodes well for the bulls. And volume profile shows that most of the volume is being traded at around $79,500. Below that price level, trading is very thin. There are some macro factors possibly contributing to Bitcoin's pullback, and they are Friday's appointment of Kevin Warsh as the new Fed chairman and possible bearish sentiment on Fed policy. But to counter that, Warsh is pro-Bitcoin and has famously called it the new gold for anyone under 40. He views Bitcoin as a legitimate, important asset. Then there's the US 20-year hitting 5.148% and the US 30-year hitting 5.131%, both the highest since May 2025, making it more attractive for investors. But these are long-term plays. Now let's talk about targets. We are still to hit the 2026 anchored VWAP. We expect the high of 10th May, $82,439 to break, price will fill the gap and make its way towards the 14th January yearly high. Our targets are at our higher level Fibonacci resistance zone at $92,801 to $93,589, but the 2025 anchored VWAP at $100,902 and the 14th January yearly high at $97,900 will act as price magnets, and it wouldn't be surprising for Bitcoin to surge to 100K. So, in summary, we are expecting Fibonacci support to hold and for buyers to break the 6th May high, and that weekly swing higher will change to a weekly uptrend and a strong confirmation that Bitcoin will go higher and fill the gap. The line of least resistance is up. So, these are the levels you need to watch. Bull case, bear case. Green, bull case. Fibonacci support holds. Buyers break $82,791, weekly swing flips to uptrend, price fills the gap and targets $92,801, $97,900, and 100K. Red, bear case. Price loses $74,500 swing low and breaks below the 2026 anchored VWAP at $73,000. The uptrend is invalidated and the pullback deepens. We hope this video has helped you. Before you go, join our free daily crypto trading newsletter. It's just a 5-minute read and it will keep you ahead of what's moving in the market. The link is above and in the description. If you found this analysis useful, subscribe to Crypto Trading Mastery and hit the notification bell so you don't miss our next daily video. Thanks for watching, and we'll see you in the next one.